Welcome! Today we're going to tackle a big one, UK tax. But don't worry, we're boiling it all down to a simple 5-minute guide to your money. Let's cut through all that jargon, shall we? So, does your head start spinning when you hear terms like personal allowance, capital gains, or inheritance tax? Yeah, you're definitely not alone. The whole system can feel, well, super complex and honestly, a bit intimidating, right? But it really doesn't have to be that way. We're here to hand you the map, a guide to the basics, so you can finally feel confident about where your money is going and, why. So here's our game plan. First, we'll get the big picture. Then we'll dive into tax on your income, tax on your assets, and tax on your legacy. And we'll wrap it all up with some really smart tax saving strategies. Sound good? Okay, let's get started. First up, the big picture. We're going to build a super simple framework to help make sense of all this. The absolute easiest way to get your head around UK tax is to imagine it in 3 main buckets. You've got a bucket for what you earn, another for what you own and might sell, and a third for your legacy. Simple, right? This is the framework we're going to use today. Okay, let's dive into that first bucket, the one most of us deal with every single day. The earn bucket, which is all about the tax on your income. Now, here is probably the most important number for most people. £12,570. For this tax year, that's your personal allowance. Basically, it's the amount you can earn before you have to pay a single penny in income tax. Pretty crucial number to know. So what happens once you earn more than that? Well, your income starts to fall into different tax bands. You'll pay 20% on the slice of your income up to $37,700. Then the next chunk is taxed at 40%. And for anything over $125,140, that rate goes up to 45%. It's a progressive system, so the more you earn, the higher the tax rate is on that portion of your money. Okay, this is a common point of confusion. You've probably seen both income tax and national insurance on your payslip and wondered, what's the difference? Well, they're not the same. Think of income tax as the money for general stuff we all benefit from. Schools, roads, healthcare, the whole shebang. National insurance, on the other hand, is more personal. It's building your specific right to state benefits, like the state pension down the line. All right, let's move on to our second bucket. This is all about the tax on your assets. We're calling this the own and sell bucket. The big one in this bucket is something called capital gains tax, or CGT. It's actually pretty simple. If you sell something valuable, like a second home or some shares, for more than you originally paid for it, the government takes a slice at that profit. That profit is called the gain. Oh, and good news, your main home is usually exempt from this. Now, you really need to pay attention here, because this tax has seen some huge changes recently. Just a few years back, you could make a profit of over £12,000 without paying any CGT. But as you can see, that tax-free allowance, it's called the annual exemption, has been slashed, all the way down to just £3,000. That's a massive drop. Another major player in the own and sell bucket is stamp duty land tax. This is what you pay when buying a property in England and Northern Ireland. Just a heads up, the rules are different in Scotland and Wales. It's a tiered system, so you pay nothing on the first £250,000. Then you pay 5% on the next chunk of the price, and it keeps going up from there. The key thing to remember is this is a tax on the purchase price, not on the profit you might make later. And that brings us to our third and final bucket. This one is all about long-term planning. It's the legacy bucket. So this is where we talk about inheritance tax, or IHT. What is it? Well, it's a tax on a person's estate, which is just a fancy word for everything they own, property, money, possessions, when they die. It's paid out before anything gets passed on to the people they've left it to. So how does it actually work? Well, there's a really important number to know. It's called the nil rate band, and it's currently £325,000. Basically, if someone's total estate is worth less than that, there's usually no inheritance tax to pay at all. But what about the value above that £325,000 threshold? Well, that's where the standard rate kicks in, and it is a hefty 40%. Now, there are other allowances and rules that can change things, but 40% is that big headline number to be aware of. Okay, so we've mapped out the main taxes in our 3 buckets. Now for the really empowering part. Let's talk about some smart and completely legal ways you can manage your taxes more efficiently. The government actually gives us some great tools to encourage us to save. You've got ISAs, where your money can grow completely tax-free. Then there are pensions, where you get tax relief on the money you put in. And if you're open to a bit more risk, there are things like VCTs and EIS, which give you some pretty big tax breaks for investing in smaller UK businesses. This is so important. A huge part of smart financial planning is making sure you use your annual allowances. Why? Because they're a use-it-or-lose-it deal. They reset every tax year. And it's not just that main personal allowance. You also get separate tax-free allowances for things like dividend income from shares and for the interest you earn on your savings. Don't leave free money on the table. Look, we've given you a great map of the basics today, but everyone's financial journey is totally unique, right? Your situation is different from anyone else's. And that's why this piece of advice is so crucial. To really navigate the complexities for your life, it's almost always best to talk to a professional. So let's just lock in that simple framework one last time. When you think about your taxes, just remember those 3 buckets: earn, own, and sell, and legacy. Easy. So there you have it. We've laid out the map. We've shown you the key landmarks. Just thinking in terms of those 3 buckets puts you back in the driver's seat. It puts you in control. So the only real question left is, what's your next move?